We have our second caller from the 650, which I will recognize as Silicon Valley, Palo Alto or something like that, and his name is Tommy. Tommy from the 650, how you doing?
Doing great, Jason. How are you?
I am on fire. I'm on fire. Things are going excellent. I'm a little tilted the last couple of days because I want things to be moving a little faster than they are. I'm a little impatient. But that happens every now and again. I get a little impatient. I want things done a little quicker. But, thanks for asking. So how long have you been listening to the show?
To the show. This is my first call-in, actually.
First call-in, but have you listened to the show before, or did you just as a first episode?
This is my first episode.
Oh, wow.
I heard about, so I'm very happy to get you on the phone.
Awesome. So now you have a question.
I wanted to ask.
Yeah.
Yeah, I'm interested in angel investing, and I'm early in my career. So I'm 25. I'm a product manager at a software company, and I've made a little bit of discretionary income. Mm-hmm. I've got a little bit of expertise, and I love following startups. I want to know if you think that there's a way that someone like me could get involved with putting money in at an early stage. And rolling the dice and watching it grow.
Okay. You made a little extra cheddar. This is truly discretionary money. So we're talking like $100,000 or something like that, or $200,000. What are we talking about? I mean, it's just like
we're talking a lot less. So
a lot less. Okay.
So a lot less personally.
Yeah.
But kind of here's my angle: is that I have a bunch of friends who are in my position, and when you put us all together, then we're talking 100,000, 200,000.
Okay. So you are not going to have the wherewithal right now in your current state to build a portfolio of investments that diversifies you enough that you would have a good chance of having a winner. The chances of a startup becoming successful, if you were to invest in 10, probably 5 would be blowouts, which means you get nothing. 2 or 3 would do okay, and then you would hope that 1 or 2 do very well. And then that might even out your portfolio. So let's say you were, like a typical angel might put $25,000 in something, $50,000 in something in the Silicon Valley. If people are doing an angel round of $500,000, they might put in $25,000 or $50,000, maybe $100,000 would be a lot for an angel investor. Anyway, that means if you invested in 10 companies, $25,000 each, $250,000, you might have, 7 of them, $175,000 you would lose. That would be a write-off, tax write-off. Then you might have 2 of them do okay. Maybe you double your money, triple your money. So they would be worth $150,000, but you're still down $25,000. But then that last one, that one might go 10x. That might go 20x. And if that goes 10x, that's $250,000 or $500,000 on top of the $150,000 we're talking about. Now you're ahead $400,000. You got maybe $1 million, and that's why people do angel investing. Is that hope or that dream? You need to do 20 of them, 30 of them, 40 of them. That's why I'm trying to do 10 a year. I did 4 last year. I'm going to do 10 this year. I'll do 10 the year after. So hopefully after 5 years, I have 50 of them, so I'm diversified enough. You're not diversified enough. What you're better off doing is getting your group of people together with your collection of money, coming up with a project you know will work, and doing your own company. So you have control of your destiny. So you don't have enough money to just throw it around and see what happens. You need to control the deployment of that capital. So you should get your 10 friends together who have $10,000 each and say, let's build a product that we think can get to revenue, cash break even, whatever, have low overhead within 6 months. And we can build small, and you'll learn something. And if you lose the money, it's no big deal. But at least you'll have some more control over your destiny and you'll learn something. In angel investing, you don't necessarily get to learn anything because you're not doing the work. So it might be a little too soon for you, to be honest. If you really sincerely wanted to learn about angel investing and being an investor, what you probably might want to do is go work as an analyst or a journalist covering the space so you can go hang out with those angel investors who are a little elusive. But it's admirable that you want to do it. Mark Jeffrey has some thoughts.
Yeah, I've got actually two thoughts. One, I agree that it's probably not the right time for you to do angel investing, and that you should do your own thing and use that money as seed investment for your own company. Number 2, when we first started off, 100 to 200,000 was not enough to get something going. You're living in a unique time right now where very small amounts of cash can be deployed very effectively. So Facebook apps are typically 10 to 30K to produce. iPhone apps are probably in the same range. You can get a hit. So basically, you can do several apps with that money and possibly have several hits out of that you control your own destiny on, and probably learn a lot more by doing your own company. The second thought I have is, I wonder if he has the accreditation issue. I was just thinking
because
about that.
you have to have 200,000 for the last 2 years
Yeah.
minimum. There's like 10 criteria. Or
I
whatever.
know.
Yeah, there's a concept of an accredited investor. You can Google it. An accredited investor means you can afford to lose that money. If you were going to angel invest in a serious company, they would want you to sign a document that says you're an accredited investor. So when I invested in Golwalla or GDGT.com or Challenge Post or the fourth company that's not announced yet, I had to sign an agreement that says, hey, if I lose this $25,000 or $50,000, it doesn't matter. It does matter to me on an emotional level, but maybe on a financial level, it's a small enough part of my net worth that I don't have to worry about it. And that's the issue you're going to have, is nobody's going to take your money.
So what if I pooled the discretionary money and like still in the purely discretionary realm of I would otherwise just be throwing this money away in like high risk stocks? What if I pooled that money from my 10 closest friends or 100 closest friends?
Yeah, you know what? They're not going to want to take your money. Like if I was raising money for a
they don't
project.
want just money.
Money is not really, money is everywhere, to be totally honest. There's too much money in the economy right now. It's part of the problem. There's a lot of money on the sidelines. That was the thing that got a lot of people in trouble. So raising money is not the difficult problem. It's finding the right person who's going to support the project. That's what they call a value-added investor. What's your value add as a 25-year-old product manager who this is, their entire net worth? You're not gonna provide some huge amount of value. They would rather get, Matt Coffin from Lower My Bills, or Cameron from Price Grabber, who was on the show, or Ron Conway, who was the angel investor in Google. They might want Kevin Rose, who did Dig, and maybe they want to invest in him as the angel. Maybe they want an angel investor like him who could tweet it to 1 million people. So you really, too soon. You're not accredited. Mark Jeffries got good advice of, hey, maybe you could be your own little mini incubator. Build 4 iPhone applications, get them to market, and see if you guys are any good at building product, any good at marketing a product. Then you could take those, you could go to angel investors and say, my friends and I built these 4 applications. These 2 suck. They didn't get anywhere. This one's doing pretty good, and this one's a hit. Would you like to invest in us to take these 2 and make them better, or would you like to help us make these 2 into their own companies? And then you start learning about angel investing as the person taking the money.
Actually, where I would go if I were you with that level of cash, actually the Droid market, because there's less apps there. Bill Gurley in Above the Crowd has a really good article he wrote just this past week on how he believes that the Droid will be the 90% market share phone because it's cheaper.
Yeah.
Even though the iPhone might be better, it'll be the high end and it'll be sort of,
I have to agree,
like the Mac is. And so there's less apps there, there's less competition. It'll eventually be a much larger market if you believe Gurley. I start building Droid apps.
Yep, he's right. He's
Where
right.
Where do pre-apps stack up against that, or WebOS?
Where do iPhone apps?
WebOS or for the Palm?
Palm is a very small. You got to look at the market share and the trend.
Yeah.
Palm is small market share, and the trend is not good. Android is a lot of market share, is growing market share, and not a lot of applications. iPhone is tremendous market share, an even larger number of applications, so a lot of noise. It's hard to stand out. So you can't go wrong building an iPhone application or a Droid application. Other platforms, you're probably going to have some problems.
Great. Thanks, guys. Thanks
Awesome.
for your time.
There's one other.
Oh, wait, Tyler has an insight.
I haven't dug into it too much, but there's a site. There's actually 2, but the one that's more popular is called Shares Post.
Shares Post.
Yeah.
Yes. You have to be an accredited investor for Shares Post.
I was going to ask you. You might even have to be accredited there.
You do.
Yeah.
There's a site called Shares Post, and what Shares Post is a secondary market for stock in non-public companies. So Mahalo's listed up there. They just put us up there, but there's nobody selling Mahalo stock, as that would be a stupid thing to do since it's going to be so valuable. But there are people selling stock in other companies, like I'm sure people are selling their Wikia stock for pennies, knowing that Jimmy Wales, anything he touches is going to be worth garbage, just like his search engine is gone. You know what I'm saying? So you might be able to buy a lot of Wikia stock. Actually, with the $200,000 that you can bring together, I think you could have a controlling position in Jimmy Wales' company. So you could have, Jimmy Wales could work for you. How does that sound? How does that sound? Good? No, it
Great.
does not
Hey,
sound
thanks,
good.
guys. I appreciate it.
All right, be cool. Cheers.